I'm joined now by Holger Kerzel, who's the head of equity portfolio management at MEAG, which is the asset management arm of Munich Re. Mr. Kerzel, tell me, you have in fact been moving equities into Germany, and you're overweight in Germany now. Why have you been moving them into Germany?
Well, the reasons are twofold, I would say. It's not so much on valuation grounds, because the devaluation is not so much different from the rest of Europe. I think you have higher chances and lower risk in Germany. Germany is very competitive, or has always been very competitive overall in the world. So you see that it's even increasing from the recent weakness of the euro, but it's also very competitive within Europe. If you look at the wage growth in recent years, you see that other European countries have enjoyed a larger wage acceleration than Germany did. And the recent wage settlement by IG Metall is another proof that Germany is quite reluctant to increase wages, but to improve productivity.
So we're looking at a region or a country which is more competitive than the rest of Europe then.
Yeah.
How do we drill down in that case into the sort of sectors that you're investing in?
Well, overall, I would say, in general, I would prefer high dividend yield stocks, which you find a lot in Germany. Why high dividend yield? Because we are currently living in an environment of low interest rates, and I think it's highly likely that this will persist for some time to come.
Where do we find those high dividend stocks?
Mostly in the defensive area, in the telecom sector, pharmaceuticals, utilities. Also, I would not prefer utilities to a large degree here in Germany. But overall, Europe, it's quite interesting as well.
What other sectors are you looking at?
Further looking at sectors like the construction sector. Maybe you might get some disappointment from the recent very cold winter. But overall, you have high emerging market exposure, which is another area which is very interesting, and where Germany has clearly some advantages relative to other European countries because of the export strength in Germany.
So you're looking at sort of manufacturers who've got exposure to the emerging markets. What about any stocks within Germany which are actually exposed to the German market?
Well, stocks exposed to the German market have some problems as well. If you look at the retail sector, for example, always been disappointments like here in consumption within Germany. It's not very likely that you see some improvement from this sector in the short term, because you have a high unemployment rate. But overall, I think the exposure towards the rest of the world is the most interesting part.
So the trick is to pick the stocks which are going to benefit from growth and emerging in the rest of the world.
That's right.
Okay,
yes.
Kerzel, thank you very much for speaking to us.